Hey, hello investors and future investors. Welcome to the channel. For today's video, I'll be showing you how to use one single stock with three different option strategies and how you could use that stock and these three option strategies in order to grow a small account portfolio over time. Now, if you are new to options trading or you're trying to use options in order to make some additional income to help you supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'll be showing you one single stock using three different option strategies that's going to allow you to grow a small account portfolio. I will try to make this video as simple and as detailed as possible. So even if you are new to options trading, you should be able to understand this video by the end of it. Now, for today's video, we're going to be using none other than BBAI, and that ticker is going to be BBAI. Now, do not focus too much on the stock. Focus on the strategies I'm about to teach you in today's video. Now, you guys know how we do it. We like to go ahead and get down and dirty with options. That just means that I'm going to be giving you a step-by-step walkthrough of how you could go ahead and practice these option strategies in your portfolio, and in order for you to go ahead and follow along with us. Now, let's go ahead and get down and dirty with options. So we're going to go ahead to trade BBAI options down to the bottom in order for us to go ahead and open up the options chain. Now, for those of you that are new to options, welcome. For those of you that are regular to the channel, you guys already know all this information down here in its entirety is representative of the options chain. What the option chain does is that it gives us enough information in order for us to go ahead and make a very informed decision before entering any options contract. Speaking of options contract, before I go ahead and let you in and give you this detailed walkthrough, I would like you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number two, always make sure to have an exit strategy before entering any options trade. That way, if the trade do decide to go tits up, then at least you know how to get out of the trade. And lastly, these videos are for education and entertainment purposes only, and they merely represent what I'm doing with my personal portfolio. Now let's go ahead and get into these option strategies. So I'm going to show you how to use an initial capital, just one amount of money in order to use as collateral. Then I'm going to show you how to make money with that collateral and continue using only your free money. So I'm going to cover lots of gems in today's video. So here's how we're going to start off. We're going to go to sell. We're going to be going to put, and now we're going to be choosing the expiration date. Please make sure to follow the expiration dates to the T because they are going to be different expiration dates. So let's go ahead. We're going to go all the way out to January 21st, 2028. That's going to give us around 776 days to expiration. Now what I'm going to do, I'm going to go ahead and look for a strike price. The strike price I'll be going with is going to be the $4 strike price right here. And because this is an income generated option strategy, I'm going to be paid. The amount I'm going to be paid is going to be $1.36 right here. And if you translate that into the real world, that's going to work out to be $136. And that's simply because each option contract does contain 100 shares. So you simply multiply the amount of money you receive here, which is $1.36, by 100 shares, and that's going to give you $136. Let's go ahead and select that. This first bullish option strategy that can be used on this one stock is going to be known as a cash secured put, or more precisely, a leaps put. The reason why it's going to be a leaps put is because the expiration date right here is more than 365 days out. Now let's go ahead to continue. Now we're going to choose our contracts. The amount of contracts I'm going to be going with just for the purposes of today's video is going to be 5. Go ahead and make sure you do the amount of contracts that coincide with your portfolio goals. Now, for doing 5 contracts on BBAI with a leaps put, I'm going to get paid because, like I mentioned, this is an income generating option strategy. The amount I'm going to get paid is going to be $679.90. Let's round it up. It's going to be $680 right here. So step number 1, get paid. Step number 2, in order for you to go ahead and execute this option strategy, you will need to leave a collateral. That is the most important criteria. Your collateral for this particular contract is now going to be your strike price right here, which is going to be $4 multiplied by 100 shares, which is going to be $400 per one contract. The fact that I'm going to go ahead and do 5 I'm going to multiply that 400 by 5, and that's going to give me $2,000. So in order for you to execute this particular option contract, you need to have a minimum of $2,000 in your small account portfolio, which is doable for most of us. Anything smaller than $2,000 is going to be a micro account, and you really should not be trading for micro accounts, and you should not be using margin either. So how is this trade going to work out? I did mention it is a bullish option strategy. So what do you want come expiration date or before expiration date? You want this share price right here to remain above the $4 strike price. Hence, it's a bullish option strategy. You believe that the share price is not going to go down to $4 here. Now, it is a very nice bullish option strategy because although you have the belief that the share price is going to continue going up or trade sideways or not going to hit your $4 strike price, you have a backup plan. Here's your backup plan. Your backup plan is that if the share price do decide to drop below the $4 price, then now you're going to be forced to pick up 400 shares at a $4 strike price as opposed to at a $6.77 strike price. So even if the trade do work against you, then you're still going to be getting a bargain. You're going to lose your $2,000 that you left as collateral, but now you're going to have 400 shares at a much better price. Now, that is the first bullish option strategy that can be used with BBAI. Now that you have this money right here, which is your $680, that's going to be free money. The only money that you put into the investment is going to be your $2,000. Now I'm going to go ahead and show you how to use this free money here for two other option strategies that's going to allow you to make even more money. Now, if you guys are learning anything so far, go ahead and make sure you like the video and subscribe to the channel. Now, let's go to strategy number 2. Now that you did the leaps put on BBAI, you have $680 in your portfolio that can be used. So here's what we're going to do. We're going to jump into a second option strategy that can be used. Let's go ahead to buy. We're going to go with call. And now I'm going to be changing the expiration date because for this one, we don't need to go that far out. So we're going to be going with January 15, 2027. And this time is going to be 405 days. Now, what I'm going to be doing now is that I'm going to be buying a call. Buying a call is not an income generating option strategy, so we're going to have to pay. Now, the price I'm going to be looking at is going to be quite similar to the previous option strategy, which is going to be $4 right here. So I'm going to go ahead, I'm going to select that. Let's go to continue, and I'm going to be doing just one single contract. This option strategy is known as a leaps option strategy. It's a leaps option strategy because although it's a long call, the duration is more than 365 days. So that makes it a leaps option. Now, I have mentioned leaps twice before, the first option strategy and now the second option strategy. So for those of you that do not know, leaps is an acronym that stands for long-term equity anticipation securities. It is a mouthful, hence we just refer to it as leaps. Now, how do you win with this leaps option? Now, before I go ahead and show you that, I want to let you guys know the money you're going to be using in order to purchase this leaps option is going to be part of the money that you just received from your initial investment of $2,000. So you're going to be using $400 of the $680 that you receive for doing the first option strategy. Now, how does this leaps option work? Ideally, this trade has what's known as infinite upside, meaning this trade could go all the way up and make you lots of money. There's no cap on this. Now, the downside is that the only amount of money that you can lose is going to be the $400 you invested. Now, remember, you don't really need to worry about that much because the $400 you invest in right now is free money. The only way you're going to lose that $400 is if come expiration date right here, if this share price stays the same or does not move, then you're going to lose all your money. However, this is the American Stock Exchange, and the American stock market has a history of going up. You have an entire year for this share price to move in the upwards direction. This is what's going to happen. Any upward movement of this share price of $1 is going to move your entire options contract up by $85. Let me show you why. This here is known as your delta. So your delta is going to be 0.85. So every time the share price goes up to $1, let's say it moves from $6.77 to $7.77, then your entire option is going to go up by $85, or it's going to go up by whatever your delta is, which is in this case 0.85. And once again, we are dealing with options contracts. So you multiply your delta by 100, that's going to be $85. And every dollar increment, it moves up. Going towards the expiration date, you keep making money. So This is the second bullish option strategy that can be used with one single stock in order for you to continue making gains. And remember, you are using it with free money. So now you've used $400 of your $680 that you received, so you have some change left over. What are you going to do with that? Well, glad you asked. Let's jump into a different option strategy now. Let's clear the parameters. Now let's go ahead to BBAI. So what we're going to do now, we do have about $280 left. So what I'm going to do now, I'm going to go here and I'm going to use that $200 and purchase, I think it's going to be about 40 shares. There you go. So I'm going to go ahead and purchase 40 shares with the rest of the money. So once again, I'm using just free money in order to be bullish on this one stock. So how do you win with this new one now? Well, for this one, it's quite simple. All you're doing is that you're just going to go ahead and buy stocks. This is how you win with this. Every dollar that the stock goes up, your portfolio is going to go up by that amount multiplied by the amount of shares you do have. So if BBAI goes up from 677 to 777, that's going to be $1. Your stocks is going to go up by $1 multiplied by 40 shares, because you do have 40 shares multiplied by $1, $40. And likewise. So there you have it, investors and future investors. This is how you use 3 bullish option strategy in order for you to go ahead and make continued income using only one single stock. Remember, do not pay close attention to the stock, pay attention to the strategies. The strategies can be used on any stock of your choice. Once again, always make sure to do your own due diligence before using any of these stocks. Stocks can go to zero and there is risk with investing. So the first bullish option strategy that can be used on a stock of your choice after doing your own due diligence is going to be a leaps put option. Once you receive income from that, that's now going to be free money to you. You're going to go ahead and take that free money and you're going to put it into a secondary option strategy, which is going to be known as a leaps call option. Now, if you have any money left over, then you're going to use that excess money. Once again, that's going to be free money and you're going to go ahead and buy some shares. So the end result is that you're now going to be able to win 3 times whenever this share price moves up. And there you have it. One stock, 3 option strategies, 3 ways to win. Now, word of caution, I did use BBAI just as a representation for this video. Just remember, now is not the right time to be using BBAI in order for you to go ahead and do these option strategies. If you guys want a more in-depth of BBAI, then go ahead and check out my videos on BBAI. I actually showed you when is the best time to get in and what is the best price trading at your 200-day moving average. Now, for those of you who have made it to the end of the video, you guys are the real investors and future investors. If you have not already, now would be the perfect opportunity for you to go ahead, like the video, subscribe to the channel. Now, the whole point of me doing all this free content and putting it out here is because I'm trying to help as many people as I possibly can get into options trading. So if you do know anyone out there that's struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.